Hey everybody, it's Ricardo Gorski, the founder of Tax.One, where we help individuals and businesses pay as little tax as legally possible. And in this video today, we are talking about the 0% exit strategy for UK citizens, residents and taxpayers in general. If you are thinking about leaving the UK and relocating to a low tax jurisdiction, then this video is for you because I'm going to explain to you exactly how you can legally move your assets out of the country at a 0% tax rate. So let's get right into it. And first of all, I wanted to mention that there are obviously many different reasons to leave the UK at the moment. It starts with the safety, especially around Greater London area. Then it continues with the political instability. There are protests, there are rallies, and the gaps between different political opinions are extremely big, especially in regards to taxation. The UK is currently experiencing extremely high taxation rates across various different sectors, whether it is the working class, small to medium-sized businesses, or even big investors, entrepreneurs and enterprises. Everyone is experiencing rising tax rates. The average British taxpayer pays about 40 different tax rates. Even non-domiciled individuals, so foreigners that relocated to the UK for various different tax incentives, are now experiencing that their tax incentives are getting abolished. And the worst part is that it's probably not going to change anytime soon because the current political party will stay in power for many more years to come. And so those are just a few reasons why the UK is currently experiencing the wealth exodus. And Paris, our lawyer at Tax.One, and me, we actually visited the UK just a few months ago, and we held a presentation about the wealth exodus where we presented Cyprus as a popular destination to relocate to. We talked in front of about 300 successful entrepreneurs, property investors in the Pullman Hotel in London. And as you can see, I really enjoyed my time in the UK, and I actually think it is a beautiful country. I mean, it took centuries for the British Empire to become what they used to be, and now seeing it becoming so unpopular in a matter of just a few years is very devastating. And we see it right here, backed by facts. The millionaire wealth migration shows that the UK is #1 in losing wealth by high net worth individuals. In 2025, the UK is losing even more wealth than India and China, which you can see right here. And over the last 5 years, we've helped hundreds of entrepreneurs leave the UK, relocate to low tax jurisdictions like Cyprus, but also Dubai. And we realized that especially in recent times, even if you want to leave the UK, it is not that simple anymore. And the reason for that are various different hidden traps when you want to leave the UK, such as number 1, the temporary non-residence rule, or also in short, TNR. The TNR is actually big because this means, here we have an article on the gov.uk website, that the UK is regularly exercising their statutory residence tests, which basically means the HMRC is checking whether or not you are still liable for UK taxes even if you leave the country. And for that, they implemented a so-called temporary non-residence, which means that you are still liable for UK taxes if the period of non-residence is a period of 5 years or less. So if you're not out of the country UK from a tax point of view for 5 years plus 1 day, then the UK is going to back tax you for all the income and gains that you earned when you was outside of the country. So that basically means that if you leave and return within 5 years, as said, your overseas income and capital gains can and will be taxed retroactively. Meaning, if you have the intention to leave the UK for 1 or 2 tax calendar years to cash out your exit or sell a few properties or make a lot of money, then this plan won't work, because as soon as you step foot back into the UK, then the HMRC officers are already waiting for you and their paycheck, of course. The same applies to inheritance tax, even though it varies a little bit, because the UK also has a so-called Deemed Domicile Rule, and even though they are regularly changing and amending and adjusting it, it basically means that even if you leave the UK, the inheritance tax, UK inheritance tax, which can go up to 40% by the way, still applies for individuals for up to 3 years, even if you do not return to the country. Obviously, there are ways around that with trust vehicles, but this can get quite complex. So in that case, to protect your wealth, we definitely recommend you to book an individual consultation call so that we can look at your assets, investments, structure, and help you as good as possible in your individual case. Now, even though this sounds a bit pessimistic and a lot of people would give up on their goals and plans to relocate, there is a 0% exit strategy that I'm going to explain in very detail right now. First of all, at Tax.One, we help individuals and businesses pay as little tax as legally possible. And so we always recommend to declare everything to the HMRC that you own, that you earn. And then we recommend to pay what you owe and let them know you're leaving by filling out the right forms, which indicate your intention to leaving the tax environment of the UK. For that, we usually work with your existing service providers from the UK, lawyers, accountants, auditors, tax advisors, whatever it is, to make sure that everything is fully compliant. Or if you do not have service providers on UK ground, we can of course recommend you and introduce you to our trusted partners, which will then do a full tax review of your current setup so that you are ready to leave the country in a professional and clean way. Again, we do not recommend to not declare certain assets, income, or whatever, because the Connect computer system of the HMRC is watching you. Trust me when I tell you they are using various different data sources, AI, data mining tools, cross-border connections, CRS and all that, and they will find out about you and your assets, and then you will definitely face problems if you do not have a clean exit in the first place. But then the next step is to set up a Cyprus company. And yes, I know there are various different other jurisdictions which you can exploit as well and which we operate in as well, such as the UAE, Dubai, for example. But especially the Cyprus setup allows us to do a lot of interesting things, which you're going to understand in a minute. And that is why we, in this video, talk about the Cyprus route, and that is to incorporate a Cyprus company. And one of the big benefits of a Cyprus company is that the memorandum and articles of associations is rather vague here in Cyprus, and this allows us to add multiple different rows and sentences about the business activity of your Cyprus company, and that can but is not limited to holding and trading assets, companies, and whatever it is. And then with a Cyprus company that will hold your UK companies, we will transfer the cash to the Cyprus holding company via dividends at 0% tax. That is thanks to the double tax treaty between the UK and Cyprus, where there is no withholding tax at source on UK ground, and Cyprus does not tax the incoming dividends here in Cyprus either. This way, we successfully transferred your cash, assets, and investments to Cyprus already, and now it is about relocating your personal tax residency as a natural person to Cyprus as well. Again, just so you know that we are unbiased, there are other tax residencies with which this can work as well, but we are happy to explain and look into that for your individual case and your goals and lifestyle and other different variables that are obviously also important next to the tax matters. But now, if we were to decide with the Cyprus tax residency, we would need to apply for your Cyprus PR. The fast track route for that is tied to an off-plan property investment of 300,000 euros into a Cyprus property, where you buy a completely new property from a Cyprus developer, and this will then grant you and your family the right to live in Cyprus forever. And very interesting, since Brexit, this will even give you and your family members the option to apply for the European Cyprus citizenship in a few years. If you want more information about the Cyprus PR, or also called Golden Visa, because Cyprus enters Schengen very soon, you can watch our separate video talking specifically about the Cyprus PR. But the Cyprus PR or Golden Visa is for your residence permit, meaning you can stay in the country. Next is your tax residency, so the country where you submit your personal tax returns. And international standard is the 183 days rule, meaning the country where you spend 6 months per year is the country where you're liable for personal taxes. But Cyprus also offers the so-called 60 days rule, where you can become a Cyprus taxpayer with just 2 months that you spent per year in the country here in Cyprus. Yes, there are obviously some other requirements involved with that, which we can advise in an individual consultation call, but many of our clients actually exploit the 60 days rule and then they spend 2-3 months per year here in Cyprus, the remaining time in Dubai, somewhere in Asia, or even in their home country, UK, as long as they don't trigger UK tax residency there. One of the big benefits of the Cyprus tax residency, regardless of the 6 or 2 months rule, is the non-dom status, which basically exempts you from any taxation on your worldwide dividend and interest income. And this beautifully leads to the next point, which then closes the circle for the 0% exit strategy, and that is accumulate wealth. So now we have a Cyprus company, we have the Cyprus tax residency, which means we pay only 12.5% on our Cyprus company profits. And then with the profits, we can, for example, build a property portfolio to lower the profits and just reinvest all the money that we make. Or we can just pay out the dividends completely tax-free under the non-dom status. However, there is a small NHS contribution of 2.65%. It's a National Health Service, which many UK people know as well. However, this contribution is capped at 4,770 euros, meaning the maximum you will pay per tax calendar year, regardless of how high your dividend and interest income is less than 5,000 euros. Then we already mentioned it earlier, and there is also a way to avoid the inheritance tax with a Cyprus International Trust, but this is very complex and relevant for just a handful of high net worth individuals. So we are more than happy to explain the Cyprus International Trust in an individual consultation call. But what you should know is that you could appoint beneficiaries such as your kids, for example, and by settling your assets into a Cyprus trust and waiting for 2 years, then the ownership to those assets will be decoupled from you as a natural person, and then with a trustee, the assets could be shifted completely tax-free to the beneficiaries regardless of their tax residency. Now, 2 more important notes. Number 1 is that Cyprus is currently undergoing a major tax reform, the biggest one in 22 years actually, where the corporate tax will most likely be increased from the 12.5% that I just mentioned to 15%. There are also some other amendments such as the 8% crypto tax, which we will discuss in other videos. And also, as mentioned earlier, the Cyprus non-dom status will exempt you from taxation on dividend and interest income for at least 17 years. Also, with the current tax reform, there will be a new option to also extend the Cyprus non-dom status even after the 17 years have passed for a lump sum. But as soon as we have official information from the government, we will obviously update you on this channel as soon as possible. So make sure to subscribe to the channel if you're interested in that. And now the most important note, so that the 0% exit strategy will 100% work for you as well, as explained in this video. And that is, number 1, a recommendation that we currently give to all our UK clients, and that is to sell your UK properties before the Renters' Right Act 2025 is implemented. The official government.uk website has an article explaining the Renters' Right Act, but the most important thing you need to know is that they are intending to abolish Section 21, which is basically a big disadvantage for private landlords, because it will make it much harder to sell your UK properties, because the rights of your tenants will become so strong that they can just stay in the property even if you tell them to leave, and even if they don't pay rent for multiple months, they can legally stay in the property. Next is the potential exit taxation. We definitely recommend everyone to leave the UK as soon as possible if you have the intention already, before a potential exit tax gets implemented, whether with the next budget or with the budget that follows after that. We definitely see a huge potential for an exit tax. We made a separate video talking about that specifically as well. Definitely recommend it. And now a very important topic for individuals that will still have family in the UK, because yes, you can still travel to the UK, of course, but you need to be aware at all times of the statutory residence test that I already explained earlier. I know from my own experience how emotional it can be to book a flight out of the country without a flight back. I mean, relocating to a new country is probably the best example of leaving your comfort zone and starting a new chapter and leaving everything that you previously knew behind. And so we generally recommend to relocate with your family if possible. My goal right now is to bring my mom to Cyprus as well, not just from a personal point of view, but also from a tax point of view, because it will help you just get rid of the ties that you still have in your home country. It is especially important if you have kids. If you have kids that still go to school in the UK, for example, and just exploit UK's infrastructure, the HMRC could potentially still see you as their tax resident just because of the fact that you will still have ties to the UK. There are no specific definitions and laws what you need to do in order to not have ties to the UK anymore, but what we generally recommend is to just shift your life center to the new country that you're going to relocate to. And now, next point is that moving back is only possible under current UK law after 5 years. Otherwise, you will get back tax on all the income and gains that you earned even if you were not living in the UK. And in addition to the points that I mentioned earlier, you shall never show intention to move back. You shouldn't text with your family that I'm going to come back after 5 years after exploiting this little loophole, so to say, because the intention should be to leave the UK behind and relocate to a new country. And you wouldn't want to end up in a situation where in 5 years from now, where you want to move back to the UK, the HMRC officers are showing you texts and chats or voice messages that you sent to your family members where you explained them that you're going to come back after 5 years plus 1 day for tax purposes. I mean, that would literally be worst case scenario. And with current politics and chat control and everything that is under discussion, I wouldn't be surprised if they're actually going to look into your personal chats, and you get the point. Anyway, we have a separate video how the HMRC is actually already spying on you and your personal life. Make sure to check that video to not do any mistakes. And very important for UK individuals is to keep the UK tax calendar in mind, because it varies to most other tax calendars and the normal tax calendar year. The UK tax calendar year is not as simple as January 1st to December 31st like it is in Cyprus and most other jurisdictions. The UK tax calendar year starts on April 6th for whatever reason. And so I'm going to give you now the perfect example of how you can leave the UK in 2026 with the UK tax calendar years in mind. Now, our example, John Doe is leaving the UK on April 1st, 2026. It can be before that, but let's just say he's leaving April 1st, which is basically right at the end of the 2025-2026 tax calendar year. It can be a bit confusing if we are not concentrated, so let's give our full attention to the next few points. And that is, after leaving the UK on April 1st, this very individual is also becoming a Cyprus tax resident in 2026, after going through the whole processes, registrations, applications, PR, visas, and whatsoever, which we will take care of for you. The main point is that this individual needs to stay in the country Cyprus for 183 days in 2026. So from April 1st, when this individual booked the flight to Cyprus, until December 31st, because this is the tax calendar here in Cyprus, the individual needs to stay 6 months in Cyprus. And then from here, the UK chapter is closed from a tax point of view. We make sure that we do not trigger tax residency in the UK, obviously, and crucially important is that we must remain non-UK resident for 5 full tax years, meaning 2026-27 tax calendar year, 27-28, 28-29, 29-30, and 30-31. During all those years, only UK source income is taxable in the UK. So if you still own UK properties, which we do not recommend, but if for whatever reason you still have UK investment properties, those are still taxable in the UK. And in addition to that, during all those years, you also need to maintain a tax residency, ideally with a country that has a strong double tax treaty with the UK, such as Cyprus. If you return within those years, so in these tax calendar years here, then the UK has all rights to tax all the income and gains retroactively, even if you haven't spent time in the UK during those years here. It is only safe to return to the UK after April 6th, 2031, as the UK loses its right to tax you on the income from here on this specific day. So after 5 years plus 1 day. And this is basically the 0% exit strategy, how you can leave the UK, not just with your assets, investments, and money that you have, cash it out in another jurisdiction, but how you can even relocate back to your home country, UK, for family purposes, for your kids. They want to go to school, uni, whatever it is. And trust me, I know how much British individuals identify themselves with their country, because my girlfriend is actually British, and talking to her father about him leaving the UK right now is actually making him very sad. He doesn't want to, but he's kinda forced because of the reasons that we mentioned earlier. And so if you're interested in leaving the UK as well at a 0% tax rate, then definitely make sure to reach out to us on Tax.One, and we are more than happy to assist you through every step of the way. Otherwise, if you're interested in more videos like that, make sure to subscribe to the channel, and I will see you in the next video.